Most project managers can't tell you whether their project is making or losing money, whether it's on schedule, or what their cash position is. And this isn't a criticism, it is a genuinely tough question to answer. So in this video, we're going to cover everything you need to know about project controls so you can answer those questions and a lot more. Okay, so what actually is project controls? Well, project controls fills the gap between planning and execution. A plan involves assumptions, estimates, guesswork. It is fundamentally what we intend to do. All plans are wrong. No plan is going to exactly align with reality. Project controls is the feedback loop between what is actually happening on site and what we planned to do. And having this feedback loop in place is going to lead to a ton of benefits for our project. And the biggest reason this is so important is because project managers love to plan. I know I can sit at my desk for a day playing in Microsoft Project, building a schedule, analyzing drawings, analyzing the critical path and optimizing things. Then the project starts, your phone begins going off every 30 seconds, things start going wrong and you forget about the original plan you made and you simply focus on what is immediately in front of you. This leads to this snowball effect where more and more things start to go wrong and you lose the original benefits of all the time you put into that plan. Suddenly, you need to work out again from scratch what date different subcontractors need to mobilize the site. You're telling them confusing dates. You realize you've forgotten something and missed it. So project controls fundamentally bridges the gap and it keeps your original schedule useful and practical. A good analogy to think about the role of project controls is like driving versus using a GPS. Project management is about driving the car. We're setting the direction, we're balancing our commitments, we're accountable for the outcomes of the project. We're the ones coordinating and making sure everything happens. Project controls is like our GPS navigation system. It knows where we are, it compares this to where we plan to be, and it calculates what it takes to get us back on course. On large projects, project controls will be its own independent function, and you'll typically have a project controls manager, but on smaller projects, the project manager will do both the actual project management and the project control function. Project controls is the function that ties everything together. It ties together cost, schedule, scope, procurement, quality, and risk. It's our data layer, our single source of truth for the project that we can use to make important, informed decisions that benefit the project. If we don't know where we are, we can't know where we're going, and we can't make plans to ensure we meet the project objectives. The next key benefit we need to understand is the link between project controls and construction contracts. Construction is all about commercial relationships. We will have a relationship with our clients. We will have a relationship with our supply chain. All of these contracts have fixed cost, fixed timelines, fixed scope commitments we have to make. Every contractual claim we make during the execution of the project fundamentally relies on project controls. For example, if we make an extension of time claim, that requires on us proving that there has been a change from the baseline schedule to the current schedule. If we're making a variation or a change order claim, then we're proving that because the scope has changed, our cost has increased from the baseline. If we're even just making a simple monthly payment claims, we're relying on quantities of being able to track the quantity of work we're completing and proving our percentage complete for that task. If you don't have good project controls, you do not have a good commercial position. There's quite a few other very important benefits of project controls. Number one is just your stakeholders' perception of you doing the work and your reputation. If you can give them concise reports showing how complete each task is, you've got a proper system to track progress, present reports, you're going to look much more professional to your client. The other benefit of project controls is as you have a team or team members delivering a project and you're not the sole project manager, having a system where you track and measure progress means that you can see how different domains of the project are reporting. And there's a famous saying that what gets measured gets managed. If your team members know for the scope of works they're responsible with, the schedule is getting tracked, the budget is getting tracked, how complete their quality assurance is getting tracked. If all these different domains are getting tracked, they have a responsibility, they have metrics against which they're being assessed, and they're much more likely to do that task well. And the final big benefit is, in addition to the project context, when you start to talk about looking at a portfolio of projects, if you have much better data and visibility of things like cash flow position, when projects are finishes, can lead to being able to make much better business decisions. So again, the principal benefit of project controls is building this data layer that ties everything together. And at the project level, we can make better decisions, but also understanding that at the business level, if we know the cash position of each project, we know when projects are starting and finishing, we can much better make investment decisions. We can much better allocate resources and manage resources between projects. Okay, long story short, if you took anything from this section, then project controls and having a project control system on your projects is very important. So how do we actually set up a system like this where we get clear visibility of each domain of the project, and how do we set up systems to track and prepare the underlying data? So the way to structure and think about project controls is as a series of domains that are interdependent. Each domain will have a planning function, for example, scheduling, that is to develop the project schedule. Then it will have a monitoring and control function, which is project controls, where we measure how the plan tracks against reality. So the interdependent functions of project controls are scope, cost, time, quality, and risk. And the performance in any single one of these domains will impact the other domain. So quality, the process of checking and verifying that what we've built is correct. Obviously, if we are not performing quality properly, we're having a lot of defects, that is going to increase the cost of the project, and it is going to increase the time taken to deliver the project. Similarly, if we are performing badly in terms of our schedule and meeting our program dates, that is going to have a resultant cost impact. We're going to increase the duration of the project, which is going to increase our indirect costs, and we're also going to potentially incur delay penalties, and we will run into coordination issues between trades. So all of these independent domains, all of these domains are highly interdependent on one another. Domain number one is scope. So scope is simply a way of saying what is the work we have to do to complete the project. Scope is always going to be a function of the actual core product we're building, which is shown on the drawings and specifications, and also the methodology we use to deliver the project. In terms of planning, that is going to be what we refer to as design management or design development. So how we actually create the drawings and specifications and define what we're going to build, and developing our original work breakdown structure. How we control scope is through change control, avoiding scope creep, tracking variations, RFIs through the design, managing different design revisions, and fundamentally only doing the work we originally said we had to do, or the original work that was specified in the contract. Then we have the domain of cost. So cost is all about delivering the project for less than what we originally budgeted for. When we develop our initial budget, which is, again, some people include the planning phase within project controls. I typically think of project controls as purely the control function where we measure the plan against reality, but planning the cost baseline for the project, we refer to that as estimating. Then project controls starts when we actually agree on the cost to deliver the project, and we can begin turning our estimate into a budget and cost codes, and then tracking the costs incurred versus our original forecast cost, and forecasting out our cost to complete and carefully tracking what we're spending versus what we said we were going to spend. Then we have the time domain of the project. But the key objective of this is to finish the project before the planned completion date. So the planning function of this would be actually building and creating the original baseline project schedule, identifying the critical path. Then the control function of this would be, while we're executing the project, measuring how much work we're getting done, how long it's taken, versus what we originally planned to do. Then we have quality, where the fundamental objective is to ensure that what we're building meets the original performance standards for the project. We have our planning function, which would be writing our inspection and test plans, developing our quality management system. Then we have the control function, which is actually making sure these inspections are taking place, tracking the quality percentage closeout, and making sure it's mapping against our physical work, so there's not a lag between the work getting completed and the quality getting handed over. And then also managing our defects and ensuring that these are tracked and closed out in a timely fashion so we don't push back project completion. And then finally, we have risk. So risk is how we deal with the uncertainty that matters. All plans are imperfect. There are things we do not know at the outset of delivering a project, and we need some structured approach to deal with uncertainty. We have both planning, which is identifying risks and identifying treatments to apply to those risks if they do happen. Then we have the control function, which is iteratively going through week by week and checking and identifying for new risks and ensuring we're putting in treatments as required. All right. The next fundamental principle, so this is the gold standard for project controls, is we have each of these separate domains: scope, cost, time, quality, and risk. The gold standard of project controls is having an integrated work breakdown structure where each of these domains aligns. We have an activity. That activity has a cost associated with it. It has a time associated with it. It has quality assurance and control activities associated with it, and risks associated with it. If we can have an integrated work breakdown structure, our job doing project controls is going to be 1 bazillion times easier. For example, in a road construction project, we have an earthworks package of works. Within earthworks, our WBS level 2, we have clearing and grubbing. For clearing and grubbing, we have a defined scope for that task. We have to clear and grub 500 meters squared at 200 mil depth. We have a cost or a budget associated with that. We then have a time allowed for that in our schedule, and that is one specific activity in our schedule. We then have a quality control check associated with that, and any risks associated with the clearing and grubbing are grouped under that WBS heading. It will, if we set up the structure, and as we go through the rest of this video, I'm going to explain more and more why this structure is absolutely essential, but it is going to make our lives so much easier. Fundamentally, when we go to actually create some sort of chart or graph or representation of the project performance, if for that specific activity, we understand the duration, we understand the cost, we understand the scope, it is very easy to go and calculate metrics like cost variance and schedule variance, and to look at the performance of the task holistically. All right, next we need to understand the project controls lifecycle, and I already alluded to this with that each of these domains of project controls has a planning and control function associated with it. However, in terms of the project as a whole, our project will go through these general steps. Now, this will depend on whether you're a developer or a contractor and where you sit in the project hierarchy. Typically, though, you will have first up your pre-award tender or feasibility phase if you're a developer, and this is where you're actually building your baseline. So I would say this sits outside project controls. So this would be estimating and scheduling, maybe your initial development of the cash flow forecast, and your risk register. These would be developing your baselines for project, agreeing on the scope of works with the client. Once that scope is defined, your baselines are set. That is when you move into the award and mobilization stage, which is where project controls begin. You want to take the information, the baselines you developed at tender, and this is where you convert them into a controllable project. So for example, we take our estimate, we structure this as a set of cost codes, buckets of money we can use to track the cost performance of the project. We also build all our registers and tracking systems. So we determine how regularly we're going to track progress, when we're going to track progress, all these input bits of information. We then have the execution phase where we've set up our systems. We begin the construction works. We begin actually tracking and measuring the performance data. We track any variances, apply treatments to them. And then the final stage of the project is the closeout, where we basically close out all the works. We prepare our final accounts. We set the final profit and loss for the project. We document any lessons learned, and we feed back any data we've got from this back into the pre-award, feasibility, and setup phases of future projects. All right, so project controls begins after the contract award phase. And so the first part of the system is, how do we actually set up a project? How do we convert our baselines, our original estimate, our agreed duration we have to complete the work, scope of works we defined in the contract? How do we convert this into a project that we can now track, monitor, and control? All right, so step number one in this is actually developing our baselines. So we have our fixed cost, fixed time, fixed scope. We want to convert these into effectively rulers against which we measure project performance. Our cost baseline, which is the approved budget broken down by WBS codes. Our schedule baseline, again, which will be the overall project schedule, the baseline schedule, and then individual tasks that we track and monitor performance against. Our scope baseline is the agreed set of deliverables that will be in a form of a contract. If we don't set up these baselines properly and structure them in the right way, it's impossible to track what is happening on site and to know whether we are over or under. So Number one is our cost baseline. Our cost baseline is our set of cost codes against which we track and manage costs. So in practice, what does this look like? It's the scope broken down, again, using the same WBS against cost and time into individual buckets of money, allowable costs we have to do that work. So for example, commercial construction project, we might break down into preliminaries, site and civil work, structure, building envelope, mechanical services, electrical services, external work. So each of these items is a chunk of scope we have to do, and our budget is an allowable amount of money we have to do that task. So the key rule with this is the estimate we created at feasibility or a tender is different to the budget. An estimate is our calculated cost to do the work. The way an estimate is structured is it's generally the most easy and logical way to compile the costs of doing the project. Now, this may be very similar to your budget, but generally it will be different. For example, say I am estimating the cost of concrete construction works and I group my estimate by the different structures, and against each of these different structures, I have an allowance to purchase formwork for that structure. In practice, when we're delivering the project, we wouldn't purchase the formwork per structure. We would probably buy all the formwork at the start of the job. Therefore, in our cost code structure, we want to structure our cost codes in a way that is easiest to track costs. So it would be a waste and would be unnecessarily confusing to have a bucket of money per structure for formwork. It would be much cleaner just to have one overall budget for purchasing formwork. Now, that is one small and specific example. There are lots of different examples like this, but you really have to think an estimate is how we calculate costs. A budget is how we spend money. So you need to structure your budget correctly to accurately track how you're going to be spending money. I quite like this chart as a way of thinking about budgets as well, where you have your total payment from the client, which is the revenue fixed at pre-construction or during feasibility. You then extract your margin or your profit. That then is your cost baseline. So this is how much it should cost you to deliver the project. On top of that, you take out your risk and opportunities. Typically, you will have one separate bucket of money where all your risk and opportunity funds are. Sometimes that's referred to as management reserve. Then you have your direct and indirect costs. Your direct and indirect costs are what you convert into your cost code. So you might have one for civil, structural, electrical, services, preliminaries, and overhead costs. And then below this, if you are then going to market for different trades and packages of work, you will have your procured scope. Now, hopefully your procured scope is less than your cost codes. Hopefully, if you've done your estimate correctly, you will have some buying gains and your procured scope will be less than your cost code. So that additional money you can put to margin or risk and opportunity. Next, you have your schedule. Now, there's a lot of different ways to do a schedule. You can have a very detailed 3,000 line P6 Gantt chart, or if you're a project developer, construction manager, you're not actually in the weeds of how the project's being delivered. Maybe a high level schedule like this, where you just have simple durations and plan durations for different activities or phases works perfectly for what you want. The key distinction to understand is that for any schedule activity, you will have your planned start and finish dates, and then you will have your, so referred to as your baseline start and finish dates. Then against this, you will track your actual start and finish dates. Again, best practice here would be to have the same structure of your cost codes as your schedule activity. So for each activity, you know when it starts, when it finishes, what percentage completed it is, and what the budget to do it. Now, when you're actually doing your project setup, it's important to understand a concept called progressive elaboration or rolling wave planning. And what this is when you have your tender schedule, it's often relatively high level, not very detailed, not very sophisticated. But as the project progresses, maybe you go from a 30% design to an IFC design, you get more information, you get better dates from subcontractors when they're mobilizing to site, all this information that typically as the project progresses, you will add more and more detail to your schedule, which gives you increased granularity to track against. So typically during this setup phase, we will take the tender schedule, the feasibility schedule, and we will add a significant amount of detail to this. And finally, at the output of the planning or pre-construction phase, we'll have our baselines for cost, schedule, and scope. We'll have broken this down into cost codes and schedule items. We'll have set up our registers, so variation registers, RFI registers, quality registers, and risk registers. And we'll have also determined our project control system. So how often are we tracking progress? When are we tracking progress? How are we measuring performance for different tasks? So as part of establishing this system for how we're going to track progress, both in terms of cost and time, we need to really set up a way to collect and track data. Now, there's a lot of confusion as to how we do this, but I like to think of this as two different types of tasks. We have what is referred to as a production-driven task and a milestone-driven task. So a production-driven task would be an activity that has a specific measurable quantity. For example, the activity of trenching, we have 1,000 meters of trenching. We can measure the progress of that task by the linear meters of trenching done per day. If we're installing piles for building foundations, we can count the number of piles that were installed. It's very objective. It's very easy to measure. A lot of tasks that surround key construction works or even some specific construction works like building fit outs, there may not be a single governing unit of measure to track progress. For example, procurement. There's no single measure like how many pages of a scope of work we've written. There's no really sensible unit to track an activity like procurement. So for that, we should use a milestone-driven or a rule of credit-based system. So this is where we take a task like procurement and we break it down into milestones. And these milestones should accurately reflect how far we are through the task. Again, it's much more subjective. It's much more important to set up correctly. But for example, we might have tender package prepared is 10% complete. The tender issued to market is 20% complete. Quotes received is 50% complete. Award of the contract is 75% and mobilize the site is 100%. Now, that would not be relevant if it is a package with a long lead time where the actual fabrication and preparation of materials is a much longer period of it. So it's important to be very careful with how you set these rules of credit because with milestone-driven tasks, it's much easier to gain. Using these systems, we can then determine the percentage complete for each task. This is relevant because when we do our cost controlling, we can say we are 50% complete the work and we've spent 40% of our budget, which is a good thing, or we might have done 50% of the work and spent 70% of our budget, which is a bad thing. So that's how we actually set the way we're going to measure the task. Then we will need to determine what is the actual supporting documents we're going to use. It might be site diaries, might be survey checks, it might be delivery dockets, might be photos. It could be a range of different things. It could be subcontractor payment claims. There's a lot of different ways we can actually track and collect this data. But again, rather than diving into it in too much detail, you just have to match it so the way you're collecting the data matches the actual task. As much as it makes sense to do as well, because again, this comes back to the integrated work breakdown structure, which I'm saying over and over and over again, but I like to have a quality metric as part of the project performance. So you might have trenching, which is linear meters of trenching. You may break this down into 10 inspection and test plans for each area of the project. Then you've got your production measurement, which is the linear meters of trenching, which is the key thing that's going to help to determine cost. But then if you align with the way you're tracking quality for that task, for example, your first inspection and test plan, which covers 10% of the work, that should be done relatively soon after you have done 10% of the construction. So again, very important to align these two. Now, with this data, what can we calculate? Well, we can calculate, obviously, the percentage complete for each task, our production rate, which is the quantity done divided by the elapsed time. We can get our variance for the task. We can get our schedule performance index. We can get our cost performance index. And we can also forecast out our cost to complete. To make this a bit more tangible, let's do a real example of solar farm construction. So we have working on a solar farm, we've got to install inverters to convert the AC into DC electricity. We have 100 inverters to install. When we developed our baseline schedule and baseline budget, we allowed to install 4 inverters per day for the planned duration of 25 days. 100 inverters divided by 4 per day is 25. Very complicated. At day 10 of our project, we have installed 25 inverters. So if we think about this in practice, we have done should have done simpler maths for this, but we've done 10 out of 25 and we should have done 40 because we're 40% of the way through the time, but we've only installed 25. So our percentage complete is 25%. 25 divided by 10, and our production rate is 2.5 per day. So 25 inverters divided by 10 per day is 2.5 per day when our plan was to have 4 per day. This gives us our schedule performance index of 0.625. Our estimated completion date, assuming we continue at this rate of 2.5 per day, so is 40 days. So we know that for this task, we're going to be 15 days late, and then we're going to have to decide on what to do about it. Now, again, coming back to the integrated work breakdown structure, if we had a cost associated with this activity per day, so originally we allowed a crane and 2 laborers to install these inverters, we would also be able to calculate our cost per activity and then calculate our performance benchmarks our plan value, our earn value, and our actual cost. Okay, so we have our data and we've calculated some key metrics on it. Comes to my next point of project controls, which is that data without action is wasted effort. Anybody can collect data and dump it into cost codes. The job of project controls is to take this information and use it to take action. So the step between the data and the action is the visualization of the data. We need to put it into some format where it is easy to identify problems. So for example, this is a project controls dashboard where we can see our cost performance, our budget, our variance to the budget, our forecast final cost. We can see our cash position, so how much we've paid out. We can see that we're going over budget. We can see our cash flow position, and we can see how we are progressing on the project and where we are delayed. We have a clean structure with all of our cost codes. We can look at each of our cost codes and we can see the forecast and variance and performance, and we can see specifically where we have issues against specific cost codes, and we know exactly where we need to put our attention and where we need to take action. Project Controls dashboard should tell us what's happening right now, why is it happening, and what will happen if nothing changes. This tells us exactly where we need to put our focus and where we should take corrective actions. Now, typically the visuals you want to show on a dashboard is some S-curve to show cash flow. What is your plan versus actual cumulative cost? Your schedule chart, so some representation of the schedule of the baseline versus actual to see where we're delayed. Some representation of either your specific cost codes or an overall snapshot of the project to show your variance to the budget. And again, another way to represent the schedule would be to show the critical path activities and whether these critical path activities are delayed. The key with a project dashboard is you don't necessarily want to fill someone in on the background of the project. You want to draw their attention to the key issues so they can quickly identify and see whether something's wrong and elect to take action about it. All right, so we have our underlying data. We've set up a system to track and manage it. We have a visualization for this data. We can quickly see where the issues. The third piece of the puzzle is what do we actually do about it? So this is the third part of forming our feedback loop. So if we think of the analogy of the project manager is driving the car, the project controls is keeping them on track, where the GPS is giving us the data, it's then showing us where we are. Then the third part of this is telling us how to get back on track. So this comes back to what to do when things change. The fundamental rule behind this is everything we've done so far is wasted if we do not use the information to take corrective action. All right, so number one is really understanding what is going wrong. We want to understand it in terms of cost, time, scope, quality, risk. All of our problems will be multi-dimensional, but the way we address them in each of the specific domains will vary. For example, if productivity is slower than expected, that will have a schedule impact, that will have a cost impact, that may be due to scope creep. We might be doing a work we didn't originally budget for. So the problem will sit across multiple domains. But the specific actions we take may be domain specific. So for example, if an activity is delayed, our productivity is slower than planned. If we're looking at this from a schedule perspective, we would want to understand, is that activity on the critical path? Is it going to push out project completion? Or is it a non-critical activity which has floats, in which case we may not choose to do anything about it from a schedule perspective. But from a cost perspective, if it's a self-performing activity and it's taking longer than planned, it's going to cost us more than we originally budgeted for. So we need to dive deeper into what is driving the cost. Have the quantities gone up? Is our rate per unit higher? And then drill down to understand specifically what is going wrong. So I guess what I'm saying in a rambly sort of way is that you really need to understand, in light of these specific domains, what exactly is going wrong? What is going wrong in terms of schedule? What is going wrong in terms of cost? What is going wrong in terms of scope? Are we doing extra work? Quality is, are we having more defects than we originally planned? Is there a big lag between us finishing the work and us doing our inspection and testing? There's all these potential there's this layer of analysis we have to do to any problem to really unpack what is what are the root causes of the problem and what are the driving issues of it. Once we really understand the problem and the impacts across all these domains, the next thing we need to do is really to properly understand what is the underlying cause. There's lots of management consulting sort of principles about how you can do this. You can do the 5 whys, do the other things. I, again, like to be very domain specific. When I go into this level of detail, I like to be very domain specific. So, for example, if an activity is having an impact on the schedule, is it resource constraints? Is it an error with our initial plan? Is it technical conditions like ground conditions, design errors, rework? Is it an external stakeholder, inclement weather? All these different factors. When we have a cost issue, what is driving up the rate? Is it the rates we're getting from subcontractors? Are we doing more overtime than we originally planned? Is the scope of work changing? Are we getting more variations? Why is the quantity gone up? Was the quantity wrong in the original estimates? You get my point. You just really have to dive deep to unpacking, going more and more layers to exactly what is causing the issue. And that, against the specific underlying issue, is how you plan your corrective actions. Now, there's always a hierarchy to how we plan corrective action. Some problems you might not actually want to spend money to fix. Other problems you should spend a ton of money to fix. And that really comes down to unpacking what is the impact and what is the cause of the issue, and then we can plan our corrective action. So the way we take corrective actions will generally have 2 layers. We'll always have the optimize option, which is basically we decide to improve the way we do it. Then we always have the spend money option and accept additional risk. So the optimize option will be, for example, we're delayed on a specific task. We're getting a lot of coordination issues between trades. We should look at improving the way we coordinate. Doesn't cost us any money, probably saves us money. Then we would look at, if it is a critical path activity and we do not have any float, we should look at spending money and accepting risk to address it. For example, adding extra resources so we work less productively, but overall we get more work done. So it costs us money. Or overlapping trades, which increases the risk of delays between trades. Or, for example, if something is costing us more, we would try and renegotiate with our subcontractors or our suppliers or go out to market again. But if it is a huge cost issue and we really have to do something about it, we might have to take more serious actions, like take on additional risk because we decide to reduce our overheads and run the project with less people. If we find we're doing more work than we originally planned, can we value engineer the design, or do we need to go back and check the contract and put in a claim to our client? Now, the purpose of this video wasn't to give you a definitive one-size-fits-all solution to project controls. It was very much to walk you through the fundamental approach to which we control a project, how we set up our GPS system so we can show the driver where they currently are, where they're going if things don't change, and then give them a plan to get back on track. If you do want to learn more specifically about construction cost control, then I recommend watching this video next.